Australia's newest iron ore mine is open for business. The joint venture between Rio Tinto and China's biggest steelmaker, Baowu, can produce 25 million tonnes a year.
The Pilbara is the main fuel engine of conventional iron ore for the world.
The new mine and ore crusher behind me are linked by an 18-kilometre long conveyor belt to Rio Tinto's existing facility in Paraburdoo. Western Range is part of over $20 billion worth of investment in new Pilbara mines that the company and state governments say will provide an enduring link between WA and China for decades to come.
China and Australia's economic and trade cooperation has driven rapid growth in both countries over the past 5 decades.
The iron ore of the Pilbara has built the great cities of China and will continue to do so for decades to come.
But China isn't building at the pace it once did. Residential construction has fallen off a cliff. New housing floor space has fallen from over 2 trillion square metres a year in 2021 to just over 500 billion square metres in April this year. Steel production in China has also flattened. The price of Chinese steel rebar, a key construction product, hasn't been this low since 2017.
The demand side of the equation certainly is coming under pressure at the moment. But, with all markets, there's two sides to the story, and certainly supply is playing its part as well.
Australian producers were already opening new mines when a crackdown on indebted property developers in China sent the industry into a downward spiral. Beijing's other steel-consuming sectors, like car making and infrastructure, haven't been able to fill the gap. And the federal government says this slowdown will see the value of iron ore exports fall from $141 billion last financial year to just $81 billion by the end of the decade. Chinese steelmaking demand has transformed the Pilbara into one of the world's most important sources of iron ore. For decades, royalties generated here have filled government coffers. And while the market's had its ups and downs over that time, the issues facing Australian iron ore producers today, as well as their biggest customer, are some of the biggest they've ever had to contend with. Fortescue founder Andrew Forrest recently warned the region could become a wasteland as steelmakers look for iron ore deposits with higher iron content for green steel furnaces. More recently, both Platts and Fastmarkets have re-jigged their benchmark price indices, changing it from 62% to 61% iron content to reflect the reality of shipments coming from the Pilbara.
It is for us as companies to make sure that the Pilbara ore remains relevant, working on how can we decarbonize the supply chain. If we find the right solutions, and we will, then Pilbara will be the source for many, many decades to come.
One of the main solutions proposed is to make green iron here and export that overseas.
But it is a challenging prospect because a lot of that technology is still to be figured out.
Rio Tinto also has the Simandou project in Guinea with another Chinese partner. Its ore has 64% iron content and will be ready to ship by the end of the year. But not everyone's convinced it'll shift the needle on global supply or become a go-to for green steel makers.
Even from Simandou, still in terms of the current processes to produce green steel, it is still a challenge at 64% Fe. It's not a slam dunk that it's going to be, that enormous threat that people talk about to Australian ore.
This red dirt still has a role to play in Australia's green energy transition.